What's up, guys? Hope you're all doing pretty well today, and welcome back to Mark's Stock Review. Today's video is going to be on BYD Company Limited. It stands for Build Your Dreams. I'm going to talk about why it's a very unique EV company, why all the hype, some of the pros and cons, and a final take. I keep my videos brief and to the point, so if you do find it helpful, please consider subscribing and hitting the bell notifications and thumbs up. I'd appreciate it. That said, let's get right into it. BYD is not a startup pure EV company. What it is actually a high-tech company that's been around since 1995 and focused on providing zero-emission energy solutions. They are based in China with over 229,000 employees, and it's important to note that they're an OTC company that trades on the Chinese exchanges. BYD started making batteries back in the 1990s and then began producing EVs in the early 2000s. It's important to note that BYD has a very broad portfolio mix. They produce electronics, batteries, they do a rail transit, and they produce commercial and passenger EVs. In order to create a solution for urban traffic congestion, BYD launched a 5-year R&D project to create BYD SkyRail, which is a straddle beam monorail system featuring proprietary technologies for switches, bogies, track beams, and other core technologies across the supply chain. In 2015, BYD officially released the 7+4 full market EV strategy for new energy vehicles. This strategy is going to encompass 7 traditional transportation fields and then 4 specialized transportation fields, which is going to include warehouses, mining, airports, and ports. BYD recently launched the HAN EV series for the global mid to large luxury sedan market. That's going to include 3 pure electric models and 1 hybrid model. They go 375 miles on a single charge and priced anywhere from $33,000 to $40,000, slightly less than the made-in-China Tesla's Model 3 sedan, according to CNBC. So this brings us to why all of a sudden the hype with BYD. Now they're being mentioned in the same sentence as NIO, Tesla, and XPeng. So here's the reason. They sold 23,217 new energy vehicles last month. That represents an increase of 85% year over year. And that includes hybrids, fuel cell, and EVs, so they are highly diversified. And furthermore, total sales rose 16% to 47,732 vehicles last month, according to local Chinese media reports. Also, demand was higher than expected for their luxury EV sedan, the Han, orders over 40,000 in 2 months. And 2 more things. Sales surged at their new face mask unit, and now according to Bloomberg, they're China's largest car maker by market value. So as an investor, are you excited yet? Well, this guy is. So now that we know why Wall Street is on board, let's talk about some pros and cons. The first pro is that Warren Buffett owns 25% stake and had the insight to get in early. This will add to the stock's attractiveness for this reason alone, especially since this is a relatively undiscovered company that trades OTC. But just note that Buffett is not always right. He did miss out on Amazon and Google and made some mistakes with Tesco and Dexter Shoe Company. Another important pro is that they're already profitable. This helps when adapting to new opportunities like the face masks. They don't necessarily have to dilute shares or take on more debt. Furthermore, they're vertically integrated and they make their own batteries, keeping more of the profits in-house. They also have clear organic tailwinds. There's reports that China's auto sales in general are rebounding post-COVID. To be fair, I want to mention just a couple cons. The first one being that it trades over the counter. Sometimes those stocks lack reliable information, i.e. if you note earlier in the video, I mentioned numbers, quote unquote, according to the local Chinese media reports, instead of showing you an actual earnings report approved by the SEC. So that speaks for itself. And keep in mind, over-the-counter stocks are often more volatile. The second con is something to be aware of. The current share price is over $22 a share, and the average price target is under $18 a share. I don't currently own shares of BYD, but I am looking at 18 to 20 to start a position. And to sum it all up, BYD is not necessarily as exciting as Tesla or NIO, but from my point of view, it's a company that should be on your radar for possibly adding to your EV portfolio. I hope you found this video helpful. If you did, please consider subscribing and hitting the bell notifications. Have a great rest of your day. Let me know what you think of this company in the comments section below. Talk to you soon. Take care.